not everybody has the discipline to stay at a particular cost that was promised to the investor. Nothing is certain anymore. We have entered into a new era of volatility, of uncertainty, of ambiguity, and of complexity. The average developer doesn't want an abandoned project, and sometimes they resort to the easy means, of going back to the customer to say whatever it is that we agreed on doesn't work, and then I need more. It's not what the investor would like to hear. This prevalence, of certain developers, right? They get a bulk of money, and rather than committing to the project, uses it for other things. We see maybe some people get spread too thin and then commit themselves to too many things and then are unable to really finance a project through to completion. And of course, the longer a project stays, the more expensive it is to complete.
As an investor, you should also look at how many projects are these people currently embarking on? If
the person appears to be everywhere, this is good for the brand itself.
But it's a potential red flag.
Turnover in itself is vanity. Profit itself is sanity. Is this person really moving the way he's supposed to move, or does he just have so many locations for the sake of it? And so if you probe enough, they don't build what they have on paper. And so it becomes a problem. This particular location, they've been on it for 3 years, and for 4 years. This other one 1 year. And then he's saying he has a new location already he's bringing to market. Hey, what's going on here? I had a customer call me this morning and said, I need the drawings for this. I know you probably won't give it to us. I said, it's your property. I said, when we deliver a property, you need to have the drawings. And I told him, you actually will get it. I was surprised. I said, because it's yours. I said, if you take that particular drawing and go build it elsewhere, you would be infringing on copyright.
As an investor, what kind of questions should I ask the developer? What are your contingency plans? I don't want, when it's about time to finish the project, I'm being asked to bring extra money.
Before I answer that question, let me try to balance this a little bit, because we have to also look out for the developers themselves. Now, for the contingency plan.
Hello and welcome to another wonderful and educative episode of Square Meter Stories. I'm your host once again, Isi Dagese. Now, before I introduce my guest, I want to give you a background of why we are doing today's topic. So, in the last couple of weeks, I've had several complaints, both from realtors and from potential clients, about buying into different projects. And what happens is that 2 years, 3 years down the line, when the project ought to have been delivered, they get a call or an email from these development companies, real estate companies, asking them to bring extra money in order to complete the project. These monies range from anything from 10 to 25 million, and at times even higher than that. And this issue is eroding a lot of trust in the real estate sector in Nigeria. So today what we intend to do is to present a guideline to investors, telling them this is how you can identify credible developers with projects that will deliver on time, and most importantly, without coming back to you, the subscriber, asking you for extra money. So, to help me tackle this topic today is the MD, CEO of the Detail Apartments, architect Olamide. Thank you very much for coming.
It's always a pleasure to come back, to have these very insightful conversations. And what a very interesting topic that I look forward to discussing with you today.
Now, why I want us to tackle this is because, yes, this used to happen in the past, but it was very sparing. You could go a long time before hearing this. But we are just at the beginning of 2025, and already I've heard several of such reports. And to me, it's unfair to investors, and it's unfair to realtors as well. Now, the average realtor might not mind because, he wants to just make his money and move. But over time, if it keeps accumulating, then even the realtors are going to suffer for it, and the developers too will suffer for it. So I just want to know, before we get into the nitty-gritty, has that been your experience hearing of such reports, and what do you think about it?
Well, there's going to be so much to unpack with this particular topic, right? Particularly with how volatile the economy has been. Very truthfully, everybody's feeling the pinch, not just the construction industry. People are trying to still adjust to the new normal. And unfortunately, not everybody has the wherewithal, or maybe the skill set, or sometimes even the discipline to stay at a particular cost that was promised to the subscriber, to the investor. as being what is able to finish the particular project. But yes, I've been hearing of it, I won't say recently. I mean, of course, I do follow other developers. I mean, I'm always looking at trends. I'm always looking at what's new. I'm always also studying the competition, what they're doing. So I have an idea about this prevalent issue, that really snowballed last year.
Yeah.
I mean, before now, like you rightly said, it wasn't something that was very, very common. I mean, except the very unscrupulous developers who were just out to fleece clients. But the economy has put the industry in a very, very sensitive, place where, like I said, a lot to unpack, but where if people aren't careful enough, I mean, that's going to be the situation. The average developer doesn't want an abandoned project. And sometimes they resort to the easy means, of going back to the customer or going back to the investor to say, whatever it is that we agreed and doesn't work, and then I need more, which really doesn't speak very well. I mean, there are situations where that may be called for. Again, there's a lot to unpack in this, so I just don't want to throw a blanket over it to say this is unfair, this is bad. But generally speaking, it's not what the investor would like to hear.
Okay, so let's begin to try and peel the layers little by little as much as we can. From what you said, one of the major reasons why it's become kind of recurring is the economic situation of the country. So are we saying that people didn't foresee this coming and price their properties appropriately?
Okay, so the naira went through a devaluation, yes. Coupled with some, macroeconomic factors, you have inflation, and you have the fall, in oil revenue,
Yeah.
and the fall in oil revenue not just is about the inability of the country, to meet its quota, the number of barrels that they would like to produce per day, but also what's happening internationally, right? There's
Yes.
a shift from big oil, although it's going to be with us for a very long time. But renewable energy and things like that, as it's happening around the world, is starting to put a lot more pressure on oil itself, the revenues. And so you see a lot of factors, really snowballing and affecting what we have in the industry today, what it is. Nobody foresaw this coming. I mean, I would say for the project which we are about to, hand over, and we'll be handing over later this year at Monastery, detailed apartment Monastery, is a 54 unit project. And we started that project when reinforcement was about 450,000 naira a ton.
Yeah.
Okay. And we have projected that this was good. I mean, as somebody who is developing, I mean, with various kind of scenario plannings, in no way would you have imagined that at some point reinforcement is going to jump up to 1.5 million. In no way. I mean, even if you had a crystal ball, that crystal ball won't tell you that things are going to 3x.
Within a year.
It happened within 3 months.
Year.
No, forget it. It happened within 3 months. I mean, all of this happened, I think, between, say, was it November 2023, and then
November, December
by
2023.
March 2024, the madness was in full display. I mean, at some point in time, to be honest with you, we had to even pause construction work to say, let's figure this thing out, because this is a little, permit my use of language, mad. For things to be this, I mean, what is fueling this whole thing? And, a lot of speculation was ongoing at that point in time. Bottom line, nobody saw this coming, right? And I would say, in terms of, would you have been able to plan for it? With project planning itself, I said something on a previous episode that if you haven't started finances yet, you probably shouldn't just go into it. I mean, a lot of people would say, oh, they want to do off-plan. Off-plan is great, particularly when it is set up in such a way that you have those consistent cash flows month on month.
Yeah.
But you have to have been able to look at the entire project itself and compress those projects into what I'll call very manageable cycles, where your cash expense for a particular period, you're able to finance that particular expense. You're able to also counterbalance that with commitments you've made. Now, the balance itself is where the trick is.
Okay.
If you haven't sold any, you probably can increase your price. Nobody will complain because nobody has committed yet. But when somebody has committed and you haven't counterbalanced that with the financing to hedge whatever exposures, because see, these exposures are real.
Yeah.
Nothing is certain anymore in this world. Nothing is certain, right? I think we have entered into a new era of volatility, of uncertainty, of ambiguity. and of complexity, they say VUCA, right? So you can never expect things to always be the way you planned it from the onset.
Yes.
And we saw that on full display last year. So what I'm saying in essence is, if you didn't properly plan for those very sudden hikes, you could have, in a way, been able to absorb whatever surprises, by probably taking a hit on your profits. In some cases, just breaking even. In some cases, losing just a little money, right? But the problem, what we have seen with most developers who are in this kind of vicious cycle where they do not know what to do, and the last resort is to fall back on the customer, is they may not have planned properly that fine balance, okay, between what they have committed to and then the exposures that are always in your face with the economy.
Okay, so I want to get into certain details here. One of which, putting myself in the position of a willing investor.
Yes.
The market is there, the returns are sweet. Everybody everybody that can wants to get into it.
Absolutely.
Right? So I want to get into it. I have the money. What are some red flags I should look at for in a developer before saying, okay, I can trust this person with my money?
Okay, let's use a maybe more politically correct word. The average developer, I'm sure, is in the business to bring value to his customer. Of course, as in any industry, there are some bad eggs that are just out to fleece you, okay? There are things that you should look out for before carefully taking a decision as to investing with a particular brand, or more or less building that comfort enough to say, I'm willing to take the risk. Nothing in life is guaranteed, yes.
Yeah.
And even with big name developers, you still have some that struggle with delivering projects. But some of the things that you should look out for that are red flags is when you have a very low price being offered for a particular house type. I mean, the average investor is in it to make his own money, no doubt about it.
Yeah.
And it's good to hear ROI of 100 and something, 200 and something percent. If I was to offer you an opportunity to make crazy returns on your money,
I'll jump at it.
You jump at it, right? But this popular phrase, "you look very well before you leap," is, if it's too good to be true, then it probably is too good to be true. Okay? So if you have an offer, or if someone is offering you to buy a particular house, say for example for 50 million, and you very well know that competition or what's obtainable in the area goes for 80 million for the same kind of property that you're looking to buy into, while that may sound as a great deal, and it's still in some cases, you must that should even increase your level of curiosity as to, before I part with my money, how really is this particular thing? So that's one red flag. I mean, if the prices are too good to be true, you need to really, really verify. Then if you do your due diligence and you're hearing certain things about, this particular area has historically had some problems, with regard to documentation, or with regard to maybe some sort of ownership issues, and you have somebody on the other side who's assuring you, everything is very fine, just go ahead, or somebody who is not really allowing you to do due diligence, or someone who's trying to hurry you up and say, we are 2 days away from a price increase, and for that reason, you should immediately key in to enjoy 100% returns, or to enjoy 50% returns, or 50% increase, returns in your own investment. You should be very, very, very worried about that kind of a thing. If there's too much of an urgency to get into a particular transaction, then you should actually be very, very careful, okay? Another thing I would say may be like what you should be very cautious about, because I do not want to use the word red flag,
You don't want
so to speak.
ruffle feathers.
Ruffle feathers, okay? You should also look at the environment itself, okay? A house may be a good deal at 20 million. But if it's 20 million in an area that has no prospect at all of developing in under 5 years,
Yeah.
trust me, your 20 million in 5 years may be 25 million. and then you'd have lost money. So you want to ensure that whatever area that you want to put money in has some level of potential to do well. Okay, and you can look at that from the amenities in the area, the proximity to the road, accessibility to the property itself, and then maybe historical, I would say, so to speak, returns or historical things that speak to the credibility of what is being marketed to you in terms of the returns in that particular area. So if everything aligns properly, then it probably is a good. If it doesn't align, then you should be more cautious. So these are like 3 quick things that you should look out for.
And just to add to what you said, because you mentioned that if the price being offered for the property is probably below what is obtainable in that vicinity. But I want to add something to that, which is the fact that considering the economic conditions of Nigeria and the inflation rate, would it be a good idea to say, okay, this is the current market value? Yeah. Say the property current market value within the vicinity is 100 million. And someone is coming into the market now to start a project. To me, it doesn't seem like a good idea, because typically that project might take, let's say, 2 years, depending on what is being built. So correct. 18 to 24 months, right? Current value is 100 million. Definitely by the time that project is 1 year into its construction life, then the current value is not going to be 100 million, which means we are also looking at the cost of materials, probably doing some 10, 15, 20% increase going by current trajectory. So if I'm coming into the market to build something now in an environment where the current value is 100 million, I probably should be pricing mine or looking at something closer to, say, 120, 130. I don't know if that makes sense, because what I'm looking at is that if I price it at current market value in 2 years' time is not going to be 100 million. Construction cost is not going to be the same as the guy who built before we got to 100 million absolutely, market value. Absolutely. So while we are talking now, specifically we are addressing off-plan projects. An investor can come in and say, oh, why is yours 120? Other people are selling at 100. Of course, we all know the advantage of buying off-plan. Allows you to stagger your payments. If you have the money, go buy the one that is ready-made. But if you don't have the money and would prefer to go the route of staggering your payments, paying in installments, then you shouldn't have the mindset that I should be getting an off-plan now at the current value of a finished project already. I'm looking at it in that regards towards those that are pricing their projects. Yeah. Does that make any sense, what I'm saying? I hope I wasn't rambling.
No. Let me just try and deconstruct it. So what you're trying to say is, if a particular house is being offered at 100 million right now, why is it that in 2 years' time, when maybe that property is about to be delivered, the value probably would have escalated or risen to about, let's say, 150. Let's use round numbers. Okay. Why is that house not being priced at something close to that, so that upon maturity, right, the developer has more or less protected himself enough to be able to still finish the project at that time? You see, pricing is key to how people perceive the opportunity in a particular development. Okay? I mean, amongst any other factor too, I mean, there are other things that go into it, but pricing is one of the weightier criteria used in evaluating opportunities. So if amongst every other thing, I have seen the particular project to be credible, to be verified, to have good promise, of return on my own investment, I would need to discount whatever future cash flows I'll be getting from that particular development back to the present, and then see if, for me, it is more or less like a net positive, because there's a cost to the money that I'm giving the developer. Yeah. There's a cost to it. I mean, so you don't know how I'm sourcing for those funds to put into transaction, and this is putting myself as an investor in a property. So if I evaluate the costs of that money I'm bringing, and I see that the future cash flows I will get from what I'm injecting outweighs the cost to me of bringing that money from somewhere. Remember, even if that money belongs to me, it's an opportunity cost if I take it out of somewhere to plug into another vehicle to bring more returns. So again, it's a game of you balance things. You find balances. So for the developer himself too, he has to ensure that it is appealing enough to me, an investor, for me to commit something to him to say, okay, I give this 100 million because I expect that in 2 years it is 150 million in value. So as a developer, he has to ensure very good use of that cash in committing that to the project to hedge whatever volatile occurrences or outcomes that may occur on that particular. So it's like I said again, a game of fine balances. I mean, you have, maybe we'll talk about this later, this prevalence, of certain developers, right? And again, I don't want to ruffle feathers, but what we see again is, somebody gets a bulk of money, and rather than committing to the project, uses it for other things. Now, not necessarily consuming it, but we see maybe some people get spread too thin and then commit themselves to too many things, and then are unable to really finance a project through to completion. And of course, the longer a project stays uncompleted, the more expensive it is to complete.
So that means that as an investor, you should also look at how many projects are these people currently embarking on.
It may be one of the factors that you may use to consider taking on that investment decision. I mean, if the person appears to be everywhere, okay, and this is good for the brand itself, because.
But it's a potential red flag.
It depends on how you look at it, right? Because if this person has very good brand image by virtue of how many offerings they have in different localities. See, there's some people that will never buy on the mainland, and there's some people that will never buy on the island. As either a property they decide to own in, or a property they decide to invest in for investment purposes. Some people have preferences, and so you want to be able to appeal to different people, and by appealing to them, you want to have a location in Ikeja, and that location in Lekki, one in Shangotedo, and you cut across all those different kind of offerings that people like. You must look at what that person is doing, the momentum they have on those projects, and what you see from the outside by your own critical analysis. Is this person really moving the way he's supposed to move, or does he just have so many locations for the sake of it? And so if you probe enough and you see, this particular location, they've been on it for 3 years, and now they've been on it for 4 years. This other one is they've been on it for 1 year, and then he's saying he has a new location already he's bringing to market. Hey, what's going on here? So for the people who may have committed to your 3-year-old project, am I sure that committing to this new project, I won't end up in 3 years as the person who you are looking at today that, what's this person doing to your money? So it may be one of those criteria that you may want to evaluate to say, is my money safe if I commit to this brand that appears to be everywhere? Then again, there are people who are actually doing it well. To be very, very fair, I admire certain brands, because I believe in, let me put it this way, I'm always very inspired when I see people doing great work. And part of what we try to do, or what we are going for in the detail apartments, is also to be able to cater to the needs of different people across different property types, across different pricing levels, and across also the locations that people tend to prefer. We also want to be everywhere, but want to do it organically, and want to do it in a manner sustainably. Okay? So ultimately, you hear of the detailed apartments in Lekki, you hear of detailed apartments on the mainland in Ikeja, but by virtue of what we have built in our different locations, we are credible already because we have delivered here, we've delivered there. And so this other offering, you had better key into it because you don't want it to be, this is the one I got to miss out on again. So for that fact alone, it's again a game of fine balances. How do you perceive what that brand is doing relative to the kind of trust that you want to see of someone before you commit money to the person?
Okay. Now, you talked a lot about fine balances and financing. In fact, you've talked a lot about financing in different episodes.
Yes.
Is there any method or any way an investor can judge a brand and say, okay, they have the finances to complete a project, or at least to push the project to a certain level and then rely on their sales to complete it. Is there any way? Because from the outside, I mean, I don't know if you can go to a developer and say, okay, you want to build, say, 12 units of XYZ kind of apartments or duplexes. What's your capital base? Those type of questions. If you're dealing with a bank, you know there's a regulation, so you know how much that. But on coming to our sector, is there any way? Because finances, like you said, is very important. So before I put my money in, I want to be sure that these people have the money to push it to say 30, 40, 50% of the way, and we know, okay, we can take care of the rest through inflows. Is there any way?
From the outside, I'll say it's not possible. But through very intelligent questioning,
Okay.
I'm sure you can deduce or make certain judgments as to if this particular brand is capable of delivering. I'll say I mean, you can never guess or know the state of one's financial health by just looking at the person. It's not written on the forehead. But there are certain things that you can say about the person or the brand in question now. I mean, what's their disposition towards the projects that they may have handled in the past. Okay. What do you hear of that? I mean, how did that go? And then you may also know some people who know the brand. You know, it could be a realtor, it could be some other professional. Again, you know, as an individual investor who doesn't know so much about real estate, it is erroneous to try and go at it alone and say by the looks of what you see, you know. You can step into a project, you know, with somebody who is very seasoned and the person asks a few questions, you know, short of even presenting your financial statements or your books to the person feels confident in the kind of responses that they give to you, you know, and with what you see again, you know. But to your question, to address it, you can't just tell by looking at it from the outside. Okay. I know there are also very sophisticated investors that want to know a little bit more about your financial status before they even commit funds to you. Not because they do not think you can deliver, but it is what is the level of prudence or savviness, you know, of this particular company in handling it. I mean, if I want to bring $1 billion to you and you're a company turning over 50 million, I'll be very nervous to do so. Okay. But if I know that you're a company turning over 3 billion, and then what you want to give to me is 100 million, I mean, by level of what we do, and what I'm going to present, short of presenting anything to you physically, I mean, you come to our projects and you see all that is going on here. You know, sometimes, you know, it is what they see that gives them the confidence. But, you know, for very sophisticated investors who see a project and they commit to it, you know, they are not even just keen to giving you the money directly. They could set up some sort of an escrow, you know. As you deliver, the money is there, it's guaranteed. And you know, you are fed the money as you perform on the project. So there are different ways people look at finances.
In fact, you just hit the nail on something that I was about to ask.
All right.
Are there methods where an escrow can be set up and said, okay, your project costs X amount, we are putting that amount in an escrow, or whatever amount in an escrow. And as you hit certain timelines, the money gets moved out to you, rather than the format we see companies do, and which we also use as well, where you say, okay, it's an off-plan project. Somebody opts for a 12-month payment plan or 24-month payment plan, and every month the person is making that payment. Is it possible for companies to look at, or for investors to ask for the option of having an escrow setup where, as you hit certain project timelines, you hit certain project milestones, the money just gets moved? So you say, okay, at this time we are hitting the foundation. Once the foundation is done, that person's escrow account instantly sends the agreed upon amount. Is there any room for that kind of
Absolutely. I mean, what we see on the surface, and the most popular model is we are going to a payment plan. And then we decide to break it up month by month, what you pay. And regardless of the kind of progress or milestones hit, Once that particular date comes by, you release a particular amount. So that's the regular model. But like I said, you have very sophisticated investors who will look at it very much and structure it such that they also protect their own interests.
Yeah.
In as much as at the end of the day, the property belongs to them, and whatever it is that has been added on the value of the property still belongs to them. But they are very careful how they release funds. I had this transaction that I almost went through. I mean, in terms of an investor wanted to come in and wanted to bring some serious money into a project that we were involved in. And the person has structured it such that, okay, this is X amount of money, that is to come in. At this particular stage, we give you X amount, right?
Yeah.
And by ourselves, because we are savvy enough, we want to see the attainment of this particular milestone before we release this other money. And it also has to be within a time period as well, because what they're trying to do is they want to ensure that that money is diligently utilized. Also, they know how volatile things are. And so they expect you to employ that money very aggressively to the attainment of a milestone, because they know that way the volatility in the economy is not going to be able to hit the money as when maybe they just release it to you and say, whenever it is that you hit this milestone, come back to us. And no. So they tie performance to how funds are being released to you. And also the performances are also tied within agreed timelines. So yeah, they're different. I mean, it's just, I'll call it financial engineering.
All right.
And so based on what you see and how you feel comfortable, it has to be also what works for the developer as well. And some mistakes too that some developers will make is, you see, I've seen a situation where somebody collected some money. It looked like a lot of money, but turnover in itself is vanity. The profit itself is sanity. Okay, so you can have a lot of money. It looks like a lot of things are happening, but in itself, if you haven't carefully factored the cost to deliver a project properly, and then you collect money thinking things are moving, at the time when you are supposed to gear up on the project and you see that your inflows or your ability to apply the finance or the capital itself starts to dwindle as the project goes on. So what may start out very hot, at the end of the day may just wane, and then you're unable to finish the project. So in essence, is how the investor himself is able to finance or structure the financing itself to his own benefit, so that returns are guaranteed and also the developer is able to deliver on the project.
Okay, so we are still talking about how investors can determine if a project is serious and if a developer is going to deliver as at when due and with quality. And I think one of the questions we have to look at is, how can a subscriber to a project determine if a project is well planned and if the developer has realistic timelines and a realistic budget for the project? Are there any ways to determine that?
So I'll be very careful in how I respond, so it doesn't appear as though what I'm saying is the only thing you should look at. You can never replace professionals in taking a decision, particularly of this kind of a magnitude involving tens of millions of naira. Sometimes it's just best to just outsource it to those who know how to do it. But from a kind of generalistic point of view, there are things that you can look at, okay? Again, it is what, aside from track record, what exactly are the kind of statutory, for example, approvals that the person has obtained, the developer has obtained? What is the current stage of the project, and how well has that project progressed in development over a period that you may have been looking at? The thing about it is about sometimes investment isn't something that you do spontaneously this way. I mean, you would, over probably the period where you're processing or deciding or trying to come to a decision to invest, see how well that project is moving. You can just even pay surprise visits yourself. I mean, most times if you go with the person who wants to sell the house to you, you probably will be set up in a way where
everything
it is the day,
managed.
everything is well in order, you see people working, but you go on another day where they're not expecting you, and then you see the true state of things and you observe yourself. But then again, I mean, at a risk of not trying to have people look out for these things themselves if they are not in any way a serial investor or somebody who actually knows so much about the built industry. You are better off deferring to somebody who is a professional. And again, you have certified architects, certified engineers, so certified surveyors, and also lawyers, property lawyers, who are there for you to give you good advice, to peruse a particular situation and say, this is what I advise. And so there are so many nuances to real estate itself that there's no one size fits all.
Yeah.
So the best is always to engage somebody who knows a lot more about you and pay that little money now in fees or risk losing tens of millions of naira in investment.
Okay, so how, again, I know you would still come back and say employing the use of professionals. But if you are someone who is probably not a serial investor, like you mentioned, and you're not too, how can you tell that, okay, this professional that I've gotten, these are the kind of questions I should ask him or her. These are the kind of things I should be hearing to know that, yes, this person is giving me the right information. Because people have gotten folks they thought were professionals.
Yes.
And the kind of advice they got led them down the wrong track. So there has to be at least like a baseline where I can say, okay, what this professional is telling me, whether it be a lawyer, whether it be a surveyor or an engineer, what this person is telling me tallies with these baselines that I expect. What are some of those questions or things as an investor I should be hearing from a professional to know that I'm being advised rightly?
Okay, maybe I would start by saying, there's wisdom in the multitude of counsel, right? And so if you're unsure, you can always maybe fact check with someone else or employ someone less like a second opinion, a secondary opinion from another professional. So if you are going at it for the first time or maybe a second time and you're not so used to the process itself, I mean, maybe one of the good ways to know if this person knows what he's talking about is a simple question. What are the things that I need to look out for before investing? Okay? Allow the person to explain, and then you could also compare with somebody else, because I would say bad advice sometimes, is just listening to just one person and then believing in one person and saying, okay, because this person told me so, without necessarily fact checking that person. You would just ask for somebody else. It could be a third person, it could be a fourth person, but be patient enough or be willing to do the hard work. And hard work is just asking. Ask, and then wherever you see that something doesn't quite match, then you can now challenge the other person and say, what about this particular issue? You said this, but I hear this, and hear what the person has to say. There isn't any one size fits all again, like I said, but I would advise someone who really doesn't know so much about it to always seek the opinion of somebody else who is into the business. I know with that, obviously, you can see some similarities and question some things that may not line up properly.
All right, so like you said, Nigeria's economy is volatile. So things happen. Timelines might not be met. All right? Even for serious developers. But how essential is it for that line of communication and transparency to be there? To the point that your subscribers know that these people are working hard. This will definitely, even if they had a setback, like you said, at a point we had to pause when the madness was just like, wait, chill. let's really get a handle on things here. We had to pause. And of course, that pause means that the certain timelines are going to be shifted forward. How important is transparency, and how do you, as a developer, communicate in such a transparent manner that it gives confidence to your subscribers to say, you know what, let's take it easy. These guys are still going at it the right way.
Okay. Communication is telling somebody what you want the person to hear. It's a simple tool, but it's what I think a lot of developers overlook. It's a strategy in itself, communication. Transparency is a strategy in itself. And without really delving too much about what we do, and giving out, trade secrets. What I would say for free is, over communicate. You can never over communicate, but you can under communicate in the sense that when your subscriber doesn't feel carried along, or when they actually do inquire about stuff, and you do not inform them, about whatever it is that you may be going through, it may, even if things aren't going so well, you should always be the first person to reach out to explain
Yeah.
to your investor or to your subscriber and say, such and such is a little delay. It may be a little bit of a challenge. And I understand why, sometimes developers find it difficult to share because sometimes you also do not want to alarm people. You may have a particular situation, it could be a crisis, and you're trying to manage it, but you also don't want to upset, your subscribers by saying, this is exactly what we are going through. But the line of communication is, this is the progress that we are making. This is how far we have come, and this is what we look to do in the coming months. Definitely, because of how volatile the economy is, there's always going to be time overrun on a project. In fact, almost every project will experience some sort of delays. You may have good intentions, but what happens when the government agency comes and flags your property for a particular contravention? The time it takes to resolve that out your project time, and you have a time overrun.
Yeah.
So, but whatever it is that is a major reason why you're going to miss your timelines, you should be able to share with your subscribers or your customers, your investors, and say this. So transparency is very, very key, not just in project deliveries, in terms of documentation. So it's one of the things where if you are not very clear about the documentation or the compliance level of the developer that you're investing in or you want to invest in, you should also be very, very careful. I think customers, investors, they deserve to know everything, full disclosure, what is going on with a particular property. Never let them hear from a third party, because then that trust would have been eroded.
Yes.
So transparency is even at the core of what we do at the detail apartments. We want you to know everything. I had a customer call me this morning, and the person was asking for drawings and said, oh, I need the drawings for this, or I know you probably won't give it to us. I said, why won't you want to have it? I said, it's your property. I said, when we deliver a property to you, you need to have the drawings. What electronic doesn't come with the manual?
True.
What thing do you buy that everything should come with a manual? And a manual is, this is what you need to know about this product that you have bought. So actually, customers, it should be that level of transparency. They need to have their drawings. Of course, I know, there's this other side to it where people actually would build
drawings and go do something else.
Yes, they don't build what they have on paper, and so it becomes a problem too. But for us, we believe that level of detail, in so many aspects, not just in what we are constructing, not just in our paperwork, but also what we want to share. And I told the man, I said, you actually will get it. But surprised, I said, because it's yours. I said, if you take that particular drawing and go build elsewhere, that you would be infringing on copyright. But this actually is given to you because this is what is in your own house.
Yes.
And so, for example, should you want to know, okay, how did a particular pipe run within the house itself? The drawing should tell you that.
Yes.
If you have some maintenance work in the future, the level of transparency is that this is exactly what was put there. Transparency also is showing people in what is the process of how we do what we do, which I think at the detail apartments we are very transparent. We want to even show people to the skeletal form of which is the reinforcement work. Yes. We zoom into it and we show you this is how the reinforcement work looks like. This is the process of getting to this stage, the blinding stage. This is how we take it to ground beam stage. This is how we take it to the ground floor slab stage. This is how we take it to the column stage. And you see every single thing that goes into the construction itself. That in itself gives them a level of a level of confidence, which they don't see with more people. Again, I'm maybe revealing some of these trade secrets, but anybody can do this, but not everybody does it. But that level of transparency is what somebody sees and says, I'm willing to buy from you.
Yeah, and it's important you mention this because I believe it was last year, and this was the first time I've ever heard a client ask for this. So he wanted to buy the building, and he said he needs to do a structural integrity test. And for him, the best way to go at it was to ask for pictures of when the reinforcement was being done and every stage. And I was like, it's the first time I'm hearing a client ask for these type of pictures. But I knew that the man knew what he was talking about. And I had to make sure he got those pictures. This is the reinforcement, this is the kind of reinforcement used, this is the concrete mix that was used. And it gives him a level of confidence to know that I'm not buying something that is going to collapse. And that is very important for creating trust. And I think that going forward, any investor should be able to ask the developer, like the ones that would ask me, oh, let me see your approvals. One would ask me, I said, I know you guys probably don't want to give. I said, no, I will give it to you. I will send you each and every one of the approval. So that we are not just going to tell you with our mouth that all the approvals are in place. See it for yourself. Go and verify it by yourself.
Let me just really interject, please. I mean, and that's one of the ways, that a potential investor, a subscriber, can check to see if the developer really know what they're doing.
Yeah.
You see, that level of full disclosure. Because really there's nothing to, there should be nothing to hide. But construction is such that as soon as you bury it, it's not seen again.
Exactly.
Right? And the building itself or that particular material may not show any signs of degradation, of dilapidation, of damage, or wear and tear. Maybe for another 6, 7, 8 years. And then you see the house maybe in another 9 years and you see, is this the thing that was, this looking this good years ago and is looking this bad now? Because they fail to show you, or when you ask, they did not even have. Not everybody does documentation that way. For us at Detail Apartments, we want to be able to show you every single phase, such that if you say, this particular building here, can you show me what it was when it was at foundation stage?
Yes.
Or when it was at ground floor column stage, when it was at decking stage, which is the first floor slab. We have pictures for all those things. And it's part of what we do in sharing very freely what we do to the public. You should have that level of access.
Yes.
If at all you own something as big and as heavy as a building, pouring your money into a particular development like that, if you don't have all the information, then you should be suspect. Then again, your professional to who you engage may also ask for these things. That's why I say go at it with people who know what they're doing.
Exactly.
Because when an engineer, for example, says, developer, please, I want to see what you did over here. Do you have any picture? Is there anything that resembles some sort of evidence to see? If the person can't show that, if the engineer is very truthful and honest, he will tell the customer, okay, this passes the price test, it passes the approval test, it passes this test, but really doesn't quite pass the quality assessment test. And so based on that, the person says, okay, you can take your decision based on this. I've had this particular development we did a while back, yes, and till today, I would say in the area where we develop this property, it still stands as one of the best properties, despite it being about, say, 7 years old. Was developed, was a very little property, 6 units of terraces, at the time state of the art, right? And even till today, really holding its own compared with other properties that are just coming up in the area itself. So pictures go along with transparency is almost, sadly so, it's not really, the emphasis or the importance is not really highlighted or celebrated, but it's very indispensable in creating that bridge of trust between somebody who knows nothing about the construction itself or somebody willing to know the level of quality assurance put into a project before committing on that investment.
Okay, so contingency plans. Like we said again, things happen.
Yeah.
As an investor, what kind of questions should I ask the developer and say, what are your contingency plans in case of delays, in case of inflation? What backup plans do you have to make sure that you still move ahead with the project? Because what we are trying to do is to say, listen, I came into this project at a certain amount. I was told if I do X amount of months, this is what I'm going to pay. And I've planned my finances to meet up with this. I don't want, when it's about time to finish the project, I'm being asked to bring extra money because I have not budgeted for that. Okay? So I need to know are you going to have a contingency plan to say, oh, in case of inflation, in case of delays, in case of whatever, I'm going to come back to you to ask for more money. What kind of questions should I be asking as an investor?
Before I answer that question, let me try to balance this a little bit because I don't want it to appear as though everything is all pro investor. I mean, we have to also look out for the developers themselves,
Yeah.
okay? And before I answer that question, I also want to highlight the importance of how the success of a project and how that relates to also the performance of the investor towards that project. If the investor is unable to fulfill their obligation as at when due, if you enter into a payment plan and the developer finances or goes about financing that project because he has a document to work with, which is the plan that you've entered into with the particular subscriber,
Yes.
and subscriber is unable to perform, then developer has every right to go to say, you know what, you couldn't do this, and then there's actually a review on the contract because you didn't fulfill your own part of it, okay? Now, for the contingency plan now you're asking of, if all goes well and the client is able to fulfill their end of the bargain, okay, the contingency plan is how you structure the transaction.
Okay.
Then again, I mean, you have to either maybe go, if you're very savvy, with properties, you can do that yourself. If you're not as savvy, you can do that with a professional guiding you on this. And that contingency plan is, look, this is the amount itself that I put into this. If you are unable to fulfill on your own side of the bargain, what are those covenants that you have to enter into to protect my own investment? And that may come by way of penalties. So if if a developer is unable to hit a particular milestone as agreed, and based on your absolute 100% performance as an investor, then these are the things that you can incorporate into the contract of sale.
Okay.
I mean, that's why you have things like that. All these things should not be word of mouth. You have a lawyer who properly documents all those things. Again, I mentioned that you must have somebody guiding you on that side. You must have a lawyer a property lawyer, not just any lawyer, who knows their own onions and can say, okay, you know what, because my client is bringing this, I also want to protect the interests of my client so that you are motivated to perform in fulfilling on your own obligation, which is delivering the project itself.
If I can cut in, what I seem to be getting from you is this. The contract of sale that the company presents is not cast in stone.
It's not cast in stone.
So I can get my lawyer to probably put some other clauses there to protect my interest as well. Okay.
So typically, right, what obtains is there are clauses that protect the buyer.
Yeah.
By standard, I mean, it should be both sides, being very mindful of each other. So if the client feels that their interests are not quite as protected by what is presented to them, then their lawyer can say, okay, I'm stepping in to have his input. And then again, the developer will say, okay, you know what, I'll have my team also review. So the balance also is achieved again. It's a fine balance. It is what works for this person, what works for that person. Okay, and then if they both agree at that point in time, then they can happily proceed with the transaction.
Final question. Are there any tools or platforms by which investors can vet a developer or vet a project?
So I don't think that really exists. And maybe that's a business idea for someone. I mean, how can you vet a property that you want to go into? And then again, because real estate is not a one-size-fits-all kind of venture, okay? I even doubt the sustainability of that kind of a model where somebody says, I want to create a business out of it. I would just say it's going to be like an advisory kind of business where
on a case-by-case basis.
Case by case, because you, even on just property title alone, that's one different kind of ballgame entirely. On titles alone.
Yeah.
We had a lawyer on this show, right, who came and said, you had a property, a large expanse, that didn't have a survey attached to it, and it was actually registered in Alausa.
Yeah. I think he said it had a C of O.
A C of
but
O
no
without
survey.
a survey. A large expanse, and you have that place fully developed already. And so for somebody who wants to go at a property, there are also implications for doing that. Because what are the things that you want to ensure you may have some certain goals for the property itself. And so based on the based on the features or based on the unique attributes of that particular investment you want to go into, what are the things that may enable you meet your end goal itself?
Okay.
So there is no one size fits all, and I won't say there's anything that a client will be able to look out for, maybe a set of 1, 2, 3 steps or criteria. No, it's always a case by case basis.
Okay.
For doing so.
All right. Thank you very much, Architect Olamidun. So we have been discussing ways by which you as an investor can vet developers and avoid unscrupulous developers and projects. Once again, I'm Isi Dagese, and I've been your host on today's episode of Square Meter Stories. Thank you.